Gold versus silver price. When was silver worth more than gold? In part 1 of this series, I discussed the history of silver, what drove silver's value, how it was used, and the gold to silver ratio. To read the full article right now, see the link in the video description. Also, to find out whether your savings are keeping up with the higher cost of living, see the link in the video description to access the free Inflation Retirement Calculator to ensure you are on track. In part 2 of this series, I will discuss the many factors that drive silver's price, a 10-year forecast of silver's price, and tax-advantage ways to invest in gold and silver, so stay tuned for the entire video. Factors that drive silver's price. Understanding the factors that drive silver's price is crucial to grasping the metal's historical value relative to gold. Consider the impact of fiat currency movements, industrial demand, silver supply deficit, and stock market instability on silver's price. Also, don't overlook the role of geopolitical uncertainties in contributing to price volatility, fiat currency, and economic movements. To grasp how fiat currency and economic movements affect the price of silver, you must be aware of several key factors. First, the strength of the US dollar and Federal Reserve policies, particularly interest rates, significantly influence silver prices. Higher interest rates can make fiat currency more attractive, potentially decreasing demand for silver and lowering its price. Secondly, industrial demand for silver plays a vital role. If this demand declines, silver's value may drop unless investment demand compensates for this dip. Lastly, economic downturns often drive investors towards tangible assets like silver. If this shift in investment behavior is significant enough, silver prices could soar despite a decrease in industrial demand. Each of these factors intertwines, shaping silver's price dynamics in complex ways. Industrial demand versus the silver deficit. You might be surprised to know that several factors, including industrial demand and a silver deficit, can significantly drive silver's price. Industrial use of silver has surged since 2012, particularly in consumer electronics, 5G infrastructure, and green technologies. The 2021 tech boom and remote work shift further boosted consumption by 9%. Concurrently, pandemic-induced mine closures led to the first silver supply deficit since 2015. Although mining operations have since rebounded, the deficit persists, creating a delicate balance between supply and demand. Evergreen industrial demand such as medical applications, electronics, automotive components, and green energy products for solar power will continue to drive demand for silver. Solar power alone represents 12% of the total demand for silver, which is quite significant given the expanding demand and popularity of solar technology. There is encouragement and compensation by the U.S. government for the production of electric vehicle charging stations throughout the United States. EV charging stations actually require more silver than electric vehicles themselves. EVs, also growing in popularity, use twice as much silver as internal combustion engine vehicles. This interplay, coupled with silver's high industrial demand and limited supply, exerts substantial pressure on its price. So, while silver's value against gold has fluctuated throughout history, these factors continue to underscore silver's worth in today's market. I just want to take a moment to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Now back to the video. Stock market instability. Given these factors, it's crucial to consider how the instability of the stock market can further influence silver's price. The stock market's volatility often inversely correlates with silver prices, meaning that when stocks plummet, silver prices may stay steady or even increase. This happens due to investors seeking safe haven assets during market downturns. Silver's industrial demand provides a buffer against price drops. The lower price of silver compared to gold, making it more accessible to small investors. Price volatility. With all these factors at play, it's clear that the price of silver is subject to significant volatility. Supply and demand fluctuations, industrial usage, and investment popularity fundamentally drive silver's price. When industrial demand escalates or supply tightens due to geopolitical or economic events, silver's price can skyrocket. Conversely, robust supply or diminished industrial demand can lead to price drops. The strength of the US dollar and decisions by the Federal Reserve also exert influence. Higher interest rates can make fiat currency more tempting, reducing silver demand. Additionally, market speculation and investor sentiment play vital roles, often leading to rapid price changes. As such, silver's price is profoundly affected by a complex interplay of various factors. Geopolitical uncertainty. Amid this volatile landscape, you must understand how geopolitical uncertainty can significantly impact silver's price. Precious metals like silver serve as safe havens during uncertain times. They provide a hedge against volatility and potential losses in other markets. Tensions and conflicts around the globe often trigger a spike in silver's price as investors seek a refuge for their capital. In contrast, periods of relative peace and stability can lead to a contraction in the silver market as investors turn their attention back to riskier assets. Major geopolitical events like wars or pandemics can cause significant fluctuations in silver's price, demonstrating the metal's sensitivity to global uncertainty. Understanding these dynamics can help you navigate the silver market more effectively. A tax-advantaged way of owning physical gold and silver without the stress of storage in your own home is a gold and silver IRA. Working with a long-established and trusted precious metals investment company that has studied and actively monitors the various economic cycles, central bank policy shifts, and the various movements of the markets can eliminate a great deal of the guesswork and headache. Furthermore, these precious metals companies can provide serious investors with competitive prices, transparency, a reasonable buyback policy, reliable customer service, and more importantly, robust security and storage of their precious metals. However, finding a precious metals IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold or silver IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides IRA as well as private investment options for home storage. See the links in the video description to find the right gold IRA company that best serves your needs. What will silver be worth in 10 years? Predicting what silver will be worth in 10 years is a bit like trying to hit a moving target, but you shouldn't let the uncertainty deter you from considering its potential. The value of silver is influenced by a multitude of factors, just as any other asset. Economic conditions, geopolitical stability, market speculation, and industrial demand all play a significant role in determining silver's worth. Analysts, including those from the World Bank, forecast an increase of an additional 4% compared to 2024. However, some have predicted that silver could reach as high as $92 per ounce by the end of 2027. While these predictions are based on current trends, unexpected events can cause significant fluctuations. For example, should an economic downturn occur, demand for tangible assets like silver might increase, pushing up its price. Similarly, geopolitical events can cause significant shifts in silver's value, as investors often flock to precious metals as safe havens during periods of uncertainty. Industrial demand also greatly impacts silver's price. Silver is widely used in electronics, green technology, photography, and jewelry. Advances in technology could lead to new uses for silver, potentially driving up demand and, consequently, its price. While the precise value of silver in 10 years remains an enigma, its potential and resilience suggest that it will likely remain a valuable asset. But remember, investing always comes with risks, so it's essential to do your research and consider all factors before making a decision. So there you have it. In certain historical periods, silver indeed commanded a higher value than gold. This was largely due to cultural values, scarcity, and industrial demand. Today, the gold-silver ratio fluctuates, influenced by various market factors. Who knows? Maybe one day, silver might again outshine gold. Keep an eye on these precious metals, as their stories continue to evolve over time. If you have a minimum of $100K in savings to protect and want to take advantage of the most competitive gold and silver prices, see the link in the video description to attend a free gold and silver educational webinar hosted by Augusta Precious Metals. Reserve your place today. Thank you for watching.